Hello and welcome to Session 2 of the Basic Tax course. We're going to begin Session 2 with a review of the Session 1 homework answer key. And to begin, I have the homework assignment for Session 2 up on the screen in front of you. As you recall, we reviewed the first question together at the end of Session 1, and the instructions for the assignment are to use the tax tables located in Pub 17 to figure the tax for each of the following individuals. And the first 4 problems require you use the tax tables, and the second 4 problems require you use the tax rate schedules. We've already covered number 1 in our last class, so today we'll move on with question number 2. Mr. and Mrs. H are married filing jointly. Their federal taxable income is $49,000. Their federal tax is blank. So what we do is we scroll through Pub 17 until we get to $49,000 of income. Their income is equal to $49,000. It is not less than $49,000. Therefore, we're going to go to the column that says if your income is at least $49,000 but less than $49,050, we then move over to the married filing joint column, and you should have entered onto your answer sheet $6,504. So the amount of tax owed by Mr. and Mrs. H based on their filing status and taxable income is $6,504. Question number 3. Jane's filing status is head of household. Her federal taxable income is $36,050. We'll move up to $36,050 in the tax rate tables. Here is $36,000. You'll see it says $36,050 in this column. However, if you go up to the top, it says if your income is at least this amount but less than this amount, then you would use the amount of tax shown. Well, their income is at least $36,050. It is not less than $36,050. Therefore, we move over to the $36,050 to $36,100 column. We find the column for head of household. The correct answer is $4,804. That's $4,804 is the correct answer for question number 3. Moving on to number 4. John is single. His federal taxable income is $1,500. His federal tax is, and to answer that, we simply move up till we get to $1,500. Here's $1,500 right here. His filing status is single, and the correct answer is $151. And here's the answer key for the Session 1 homework assignment. You can see that the answers are appearing on here. I've shown you where to find those in the tax rate tables. Now we're going to move on to the second part of the homework assignment, which was to use the tax rate schedules. We covered question number 5 together, so let's move on to question number 6. And as we do that, let's move over to page 273. And take a look at the tax computation worksheets together. And the first problem is for a single filer. Question number 6. Jeff is single. His federal taxable income is $133,050. So let's take a look at the tax computation worksheet for single. And we see that his income of $133,050 puts him in the lowest section of this particular worksheet. He's not going to move into this column, for example. He'll stay right here. So we enter $133,050. We multiply that by 28%. We get $37,254. We subtract out the amount of tax on the first $100,000 of taxable income that he has. That's $6,383. We subtract that amount from $37,254, and we're left with his total tax for the year, $30,871. The next problem in line, Sally is head of household. Her federal taxable income is $111,891. Her federal tax is blank. So we move over to the head of household portion of the worksheet. And in the head of household column, we're going to begin by entering her taxable income in the appropriate column. So we enter $111,891 in column A. We multiply that by the tax bracket for a single filer at this income level. That's 25%. And we get $27,972.75. Next, we subtract out the amount of tax that is calculated on the first $100,000 of income, and that is $5,232.50. And we're left with the final answer. The amount of tax to enter on line 44 of Sally's Form 1040 is going to be $22,740. The next problem in line, Bill is a qualifying widower with a dependent child. His federal taxable income is $139,473. His federal tax is blank. Well, qualifying widow or widower uses the married filing joint tax rates. So we're going to use Section B of the worksheet, which is used by married people. And in this case, the income is $139,473. That is greater than $139,350. So we're going to move over to the next section of this table, and we will enter $139,473 in column A. Next, we multiply that out by 28%, and we get $39,052.44. We then subtract out the amount of tax, $11,930.50, which is owed on the first $139,350 of income that Bill has. That leaves him with a total tax to enter on line 44 of his 1040 of $27,121.94. Now, I've just shown you how to figure these tax amounts on the worksheet. But the answer key for this session's homework assignment is just using the formula to help you figure those. And you can see that all of our answers are totaling out correctly here on this particular answer key. So that concludes the review of the Session 1 homework assignment. It is now time to take the Session 1 quiz. You now need to go to the assignments page and take the Session 1 quiz. Please pause video playback, complete the Session 1 quiz. When you are finished, resume video playback for the Session 2 lecture. And the first password of session number 2 is SPOCK, S-P-O-C-K. All right, so we're back in our manual looking at exemptions. An exemption is a tax deduction that reduces your taxable income. And for 2011, you can generally claim a deduction of $3,700 for each exemption you claim on your tax return. That includes an exemption for yourself and an exemption for your spouse and any dependents you are allowed to claim on your return. There are limits on personal exemptions that you need to be concerned with. You no longer lose part of your deduction for personal exemptions regardless of the amount of your adjusted gross income. And that has to do with EGTRA. It was one of the acts passed under George Bush, and it led to a phase-out of the reduction of the personal exemption and dependency exemption deduction, and it's phased out for an additional 2 years through 2012. So for all of the history of claiming personal exemptions that I can remember, when your income reached a certain point, your exemption deduction started to phase out. And under EGTRA, it stopped phasing out. But it's only temporary, and once we reach 2013, there will again be a phase out of the exemption deduction unless more legislation is passed. Now, there are two types of exemptions. There is the personal spousal exemption, and there is the dependency exemption. And of course, when you're visualizing Form 1040 in your head, there's a point on 1040 where you claim an exemption for yourself. There's a point where you claim an exemption for your spouse. And that's what we're talking about with personal spousal exemptions. Then underneath that, on line 6 of the Form 1040, that's where you list your dependents. And dependency exemptions fall into two categories again. One is a qualifying child, and one is qualifying relative. So let's look at some of the rules for personal exemptions. If you are single, you can claim your own personal exemption if you are not a dependent of someone else. If another taxpayer is entitled to claim you as a dependent, you are not allowed to claim your own exemption, even if the other taxpayer decides not to claim you as a dependent. So your exemption is not something that you have a right to give away on yourself. You can't say to your mom and dad, I'm going to let you claim me. Or your parents can't say to you, I'm going to let you claim yourself this year. Tax law determines whether or not you get to claim your own exemption. And you are not allowed to claim your own exemption if you're someone else's dependent. But if you're not a dependent of someone else, then you are allowed to claim your exemption. Next, we look at married. You are generally allowed one exemption for yourself, and if you are married filing a joint return, one exemption for your spouse. You may claim an exemption for your spouse on a married filing separate return only if your spouse had no gross income and was not the dependent of another taxpayer. So what? Your spouse does not file a joint return with you. Your spouse has zero income in the world, doesn't file a return with someone else. You're actually allowed to claim their exemption. Did you know that? On your married filing separate return. I've done it maybe once in 20 years. These rare things do come up. Death. If your spouse died during the year, you can generally claim your spouse's exemption under the same rules that applied to married people. If you remarry during the year, you cannot claim an exemption for your deceased spouse. However, if you have no income, your exemption may be claimed by both your new spouse and your deceased spouse on their married filing separate returns. It's the only place in the world I know of that the personal exemption deduction can be claimed twice. So the way I talk about your exemption deduction is that every person living and breathing in the United States has $3,700 stamped on their forehead. And that $3,700 deduction attached to your forehead can be claimed only once a year. And it's either claimed by you on your return or someone else who can claim you as their dependent. And the only exception to that is if you are a widow or widower with no income and you remarry before the year's out and both your spouses, your dead one and your new one, file separately, they can both claim you. But it's the only place in the world where two people can claim that same $3,700. Other than that, it's a safe bet to say that $3,700 is claimed only once each year. Do you get to claim your $3,700 or not? Or do you get to claim someone else's $3,700 or not? And the answer is yes, if they qualify as your dependent. Divorced or separated spouse. If you obtained a final decree of divorce or separation by the end of the year, you cannot claim your former spouse's exemption. This rule applies even if you provided all of your former spouse's support for the year. Dependent exemptions. So determining who qualifies as your dependent should be simple. However, as we can see in today's class, the only thing I've done is serve to make you even more confused than when you started. I bet before today's class started, you thought dependency was going to be a breeze of a session, a no-brainer. You'd just fall comatose listening to me talk. However, I think I've already shown you that dependency is not simple. And correctly determining who you can and who you cannot claim as a dependent is, of course, one of the most important areas of the tax return. There is one test you apply to yourself, as well as tests for each type of dependent, qualifying child and qualifying relative. All of the tests must be met, or you cannot claim an exemption for that person. Firstly, we look at the dependency test for yourself. You cannot claim any dependents if you or your spouse, if filing jointly, could be claimed as a dependent by another taxpayer. Then there are dependency tests for a qualifying child. Now, these dependency tests that I'm about to read to you are dependency tests that used to be in Pub 17 before 2005. In 2005, IRS completely rewrote all of its rules on claiming dependents and did away with something we referred to back then as the 5 dependency tests. There used to be a set of 5 dependency tests. You applied each test to every dependent, and that told you whether or not you had a dependent. In 2005, IRS threw all of that out, actually in an effort to make things less confusing, but I think they only basically served to make things even more confusing than they already were. And at that point in time, I remember almost having a tantrum trying to understand the new rules. It's like, how could they do something this bad? How could they make it this confusing? They had made it so confusing that I, as a tax school instructor, spent half a day trying to understand the new rules. So anyway, I'm going to show you the rules as they make sense to me. And I'm also going to show you the rules that are in Pub 17. And since my book is open right now, I'm going to show you the rules as they make sense to me, and then I'll take you to Pub 17 after I'm finished with those. So dependency tests for a qualifying child. To claim an exemption for a qualifying child, you must meet all 7 of these tests. Now, there used to be 5, but the way the IRS has rewritten rules, there's 7 when we're talking about a qualifying child. There's the joint return test. There's the citizen or U.S. resident test. There's the relationship test, the age test, the residency test, the support test, and an additional special test for a qualifying child of more than one person. Let's take these in turn. Firstly, with the joint return tests. You generally cannot claim an exemption for your dependent if he or she files a joint return. However, if your dependent files a joint return merely to claim a refund and no tax liability would exist for either spouse on their married filing separate returns, then you can still claim your dependent's exemption. Now remember, we're not talking about income, we're talking about tax liability. You have a tax liability if, after claiming your deductions, you go to the tax tables and you show tax, or you have any of the other forms of special tax, like additional tax on IRA distributions, or the alternative minimum tax, or nanny tax. Any of those can trigger a tax liability. If your dependent files a joint return, typically you cannot claim that person as a dependent on your return. So your dependent files jointly, they're typically out, except for that almost not very, very rare situation where they file a joint return only to claim a refund and no tax would be owed if they filed separately. Citizen or U.S. resident test. For some part of the calendar year, a person must be a U.S. citizen or a resident of Canada or Mexico. Relationship test. To meet this test, a person must be your child, grandchild, great-grandchild, etc., or a stepchild. But note that a stepchild is a child of your spouse. A child of your boyfriend or girlfriend is not your stepchild. Or an eligible foster child. If that child was placed with you by an authorized agency, then a foster child is the same as a child. Brother, sister, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of them, such as a niece or nephew.
Password number 2 for session 2 is McCoy, M-C-C-O-Y.
I see Damien asking, so where is a boyfriend listed? Nowhere under qualifying child, because we're talking about the rules for qualifying child, and a boyfriend would never be your qualifying child. Now, a boyfriend could be a qualifying relative, but we're not talking about qualifying relatives, we're talking about qualifying children. Age test. To meet this test, a child must be under the age of 19 at the end of the year and younger than you or your spouse if filing jointly. A full-time student under the age of 24 of the year and younger than you or your spouse if filing jointly, or permanently and totally disabled at any time during the year regardless of age. Here's an example. Your 23-year-old brother, who is a full-time student and unmarried, lives with you and your spouse. He is not disabled. Both you and your spouse are 21 years old and you file a joint return. Your brother is not your qualifying child because he is not younger than you or your spouse. He could be your qualifying relative, but we're not talking about qualifying relative. We're talking about qualifying child right now. Residency test. To meet this test, a child must have lived with you for more than half of the year. There are exceptions for temporary absences due to illness, education, business, vacation, or military service. Death or birth of the child during the year. Kidnapped child if all of the following are true. The child is presumed by law enforcement officials to have been kidnapped by someone who is not a member of your family or the child's family. In the year the kidnapping occurred, the child lived with you for more than half of the part of the year before the date of the kidnapping. There is no determination in a prior year that the child is dead, and the child would still be under the age of 19. Children of divorced or separated parents. This rule also applies to parents who were never married. A child will be treated as the qualifying child of the non-custodial parent if all of the following apply. The parents are divorced or legally separated under a decree of divorce or separate maintenance, separated under a written separation agreement, or lived apart at all times during the last 6 months of the year. The child received over half of his or her support for the year from the parents. The child is in the custody of one or both parents for more than half the year, and a decree or written agreement that applies to 2011 provides that the non-custodial parent can claim the child as a dependent, or the custodial parent signs a written declaration, Form 8332 or similar statement, that he or she will not claim that child as a dependent for the year. So typically there's a residency requirement. To have a qualifying child, that child must live with you for more than half the year. The only exception to that test is you are the non-custodial parent. Your child lives with the custodial parent, and that custodial parent has released your child's dependency exemption to you. So you're going to claim your child as a qualifying child, even though your child did not live with you. And you're able to do that because that child is your child, and the custodial parent is releasing that child to you. Otherwise, in order to have a qualifying child, that child must live with you. Now, I have to point out that if you are in a divorce or separation situation, or even if you were never married, the fact that the custodial parent has released your child's exemption to you does not make you head of household. It just entitles you to that child's exemption, because to be head of household, the child would have to live with you for more than half the year. So don't go getting these tests mixed up. All right? Support test. To meet this test, the child cannot have provided more than half of his or her own support for the year. To see what is or is not support, see Publication 17, page 33. Support test to be a qualifying relative. Note, if a child is supported by state welfare, housing, or other benefits, such support is considered to be support provided by a qualifying relative, but is not considered to be support supplied by a qualifying child. So what they mean by that is, in order typically to claim a dependent, you have to show that you paid more than half the cost of that dependent support. But when we're talking about a qualifying child, you only have to show that the child did not pay more than half of his or her own support. And if you've got third-party support coming in from the state in form of housing assistance or welfare, that support is not considered to be support provided by the child. It's also not considered to be support provided by you. But the question is, did the child provide more than half of his or her own support? So in order to say yes or no to that question, you have to look, does that child have their own source of money for support? Do they have a job? Do they have an inheritance? Do they have gifted money? Where did the money for their support come from that they're providing for themselves, for their own support? The child cannot provide more than half. You as a parent don't have to provide any at all. It's just that the child cannot provide more than half of his or her own support. There's a question in the classroom, do I quiz my clients in that depth? Well, when I have a question come up on support for a qualifying child, yes, I do look at the issue. If I have a client who earned $10,000 all year, and they have a 20-year-old kid who's going to college, and that kid had a job, yes, I'm going to be looking at whether or not that kid provided more than half of his or her own support. It's a very important question, because if the kid did provide more than half of his or her own support, then that kid may not be the dependent of my filer, of my client. And if they're not the dependent of my client, they're going to maybe flunk some other tests too. So yes, I do get into it. But in most situations, you're looking at a taxpayer who earns, average wage of $50,000 for the year. They got a couple of kids at home. Do I start worrying about whether those kids provided more than half of their own support? No, but I certainly do ask if the children lived with my client, and did they live with my client for more than half the year. That does come up. Special test for qualifying child of more than one person. If you and another person have the same qualifying child, you and the other person can decide which of you will treat the child as a qualifying child. That person can take all of the following benefits, provided that person is eligible for each benefit based on the qualifying child, including the exemption for the child tax credit, the head of household filing status, the credit for child and dependent care expenses, exclusion from income for dependent care benefits, and the earned income credit. The other person cannot take any of these benefits based on this qualifying child. In other words, you and the other person cannot agree to divide these tax benefits between you. If you and the other person cannot agree on who will claim the child, the tiebreaker rules apply. And I do see, before I flip over to the next page, what about child that receives Social Security? Social Security received by a child is a very important thing. Non-taxable Social Security can still be used to provide a child's support. It is paid to the child in the child's own name. It is not a welfare benefit. It's an actual benefit that's typically given because a parent died or a child has become disabled. And Social Security benefits in the name of the child are considered to be support provided by the child. Here are the tiebreaker rules. They come from Publication 17, page 30. If more than one person files a return claiming the same qualifying child, and only one of the persons is the child's parent, then the child will be treated as the qualifying child of the parent. If two of the persons are parents of the child and they do not file a joint return together, then the parent with whom the child lived for the longer period during the year. If two of the persons are parents of the child and they do not file a joint return and the child lived with each of the parents the exact same amount of time for the year, then the parent with the highest income wins. If none of the persons are the child's parent, the person with the highest income wins. And if either parent can claim the child but does not, then the person with the highest AGI wins as long as it is higher than either of the parents' AGI. So this is getting into conditions here where we have a household. Multiple people in the same household can claim a child's exemption. You might have an unmarried mother and father fighting over who will claim that child, or maybe even agreeing who will claim that child. So let's just say we have Jack and Jane. They're not married. Jack earns $20,000 a year. Jane earns $10,000 a year, and they have a qualifying child. Who can claim the child? They both can. Who wins under the tiebreaker rules? Well, it would be Jack. He earned more. But should Jack claim the child? Might be that Jane's better off because, frankly, $10,000 of income and a qualifying child, Jane's earned income credit is going to be quite a bit higher than Jack's. But if Jane claims the child for earned income credit, she probably won't qualify for head of household because Jack earns so much more. It's probably the case Jack paid more than half the cost of keeping up the household, not Jane. So Jack gets nothing. Jane gets earned income credit, the child tax credit, and the dependency. But with her income being so low, dependency won't help her. Child tax credit will benefit her. She'll get that, and she'll get the earned income credit. So you're going to weigh the differences. Jack gets nothing, and Jane gets EIC and child tax credit. Or Jack claims the child, gets earned income credit, head of household filing status, dependency deduction, and child tax credit. Which of those formulas is going to give us the highest benefit? Jack and Jane can fight all they want, but in the end, Jack wins because they live together equally, the child lived with them equally, and he earns the most money. Now let's change things a bit. Jack earns $20,000, but he is not the father of the child. Jane is the mother of the child, and Jack provided the support for the child. Jane can say tough, and she wins because she's related to the child. Now, technically, Jack would get nothing because he wouldn't even have a qualifying child, and if you have a person who is a qualifying child of another filer, automatically they're not your qualifying relative. We'll get to qualifying relative in a minute. So let's make Jack an uncle or a grandfather. Jack will not win as a grandfather. He does have a qualifying child, but if Jane says, Jack, you can't claim my child, she wins because she's the parent. But Jane could choose to give the child to Jack because the tiebreaker rules allow for that. If either parent can claim the child but does not, the person with the highest AGI can claim the child as long as that AGI is higher than the highest AGI of any parent. There we go. Dependents of divorced or separated parents. As a reminder, beginning with 2009 tax returns, a custodial parent is the parent with whom the child spends the greatest number of nights during the year. In the instance where the child spends an equal number of nights with each parent, the custodial parent will be the one with the higher adjusted gross income. So what I say to my parents when they say, well, I don't know whether the child spent more nights with me or with his father, I say, well, what you do is you get a calendar, and every night of the year the child sleeps in a bed in your house, you put an X on it. And at the end of the year, you add it up. And if you've got 183 days, ka-ching, you win. Except in a leap year, you need 184 days. A non-custodial parent claiming an exemption for a child can no longer attach pages from the divorce decree or separation agreement instead of Form 8332 if the decree or agreement went into effect after 2009. For divorce or separation agreements that went into effect after 2008, the following provisions apply to a non-custodial parent who claims an exemption for a child. The non-custodial parent must attach Form 8332 or a similar statement signed by the custodial parent. The signed statement must have the sole purpose of releasing a claim to the child's exemption. The non-custodial parent must attach the required information even if it is filed with a return in an earlier year. Revocation of release of claim to a child's exemption by a non-custodial parent. This is Form 8332. It is one of the forms that you would mail to the IRS attached to Form 8453 if you electronically file. So if you're claiming a child on your return and you are not the custodial parent, the custodial parent needs to sign this form, and then you attach this form to your return or you mail it in with Form 8453 if you're e-filing. This particular form is used to release a claim to exemption for the current year for a child. And it says, I agree not to claim an exemption for my child, and you write the name of the child, for the tax year in question, 2000 and whatever. And then the custodial parent signs it and writes his or her Social Security number and dates it. The custodial parent can also agree to release the exemption for future years and specify what those future years are. Now, after a custodial parent has released an exemption to a child, they can have a change of heart and change their mind. But if they do, they need to sign Part 3 and mail it into the IRS. And the revocation cannot come later than the year that is at issue. So if a custodial parent provides notice of revocation to the non-custodial parent in 2011, the earliest tax year the revocation can take effect is tax year 2012. So you can't change your mind during the tax season. Oh, I gave away the exemption, but I'm mad at him. I'm going to claim him anyway. You can't file the revocation at that point. You have to, plan ahead. So if I don't want the other parent of my child to claim my child for 2012, I need to revoke it in 2011. And if I revoke it in 2012, it won't take effect till 2013. Now, in the olden days, the IRS had a flowchart in Pub 17. I loved the flowchart. Anytime I had a question about dependency, I opened up 17, flipped to the flowchart, and went through it. But the IRS did away with the flowchart. In 2005, they took it away. And I was very, very upset. I couldn't handle it. No flowchart? How can I teach without a flowchart? It's my lifeblood. So ever since then, I've had my own flowchart. It brings order to my universe. So here is the flowchart for a qualifying child. And it is longer than the old flowchart used to be because we have more rules now. So firstly, to have a qualifying child, we have to meet the dependent taxpayer test. Are you the dependent of another person? If the answer is yes, and you do not have a qualifying child. But if the answer is no, because you are not the dependent of another person, then we move on to the joint return test. Did the child file a joint return for the year? The answer must typically be no, and if it is, we move on to the U.S. citizen or resident test. Was the child a U.S. citizen or a resident of Canada or Mexico for any part of the year? The answer must be yes, and if it is, we move on to the relationship test. Was the child your child, grandchild, stepchild, brother, sister, niece, nephew, or a descendant thereof, or your eligible foster child? You will notice that all of these are essentially, do you have a child? This is the qualifying child test, not the qualifying relative test. The answer must be yes, that you have a child who meets the relationship test. And if it is, then you move on to the age test. Was the child under age 19 and younger than you or your spouse if filing jointly, a full-time student under age 24 and younger than you or your spouse if filing jointly, or any age and permanently and totally disabled on the last day of the year? The answer must be yes. And if it is, we move on to the residency test. Did the child live with you for more than half the year? The answer must be yes, except there are certain exceptions that apply, and those exceptions essentially state that if the child is away from home temporarily and intends to return home at the end of that temporary absence, they're considered to live with you for the entire time that they're gone. And examples would be military, sickness in the hospital, education, gone to college. Those are all examples of the child could be gone for most of the year, but they return home for summer vacation. They always intend to return home at the end of that period of time. Your home is their home even while they're away. So the child must meet that residency test. So if the answer is yes, we move on to the support test. Did the child provide more than half of his or her own support? The answer must be no. If the answer is yes, the child provided more than half of his or her own support, you're out. So the answer must be no, and if the answer is no, then we move on to these final tests, which are special tests for qualifying child of more than one person. Is your child the qualifying child of another person? If the answer is no, you're done. Whew, I get to claim the kid. But if the answer is yes, then we have to go on. Does the other person agree to allow you to claim that child's exemption? If the answer is yes, get that 8332 signed and you're done. If the answer is no, do you win under the tiebreaker rules? If you win under the tiebreaker rules, you don't need their permission at all. You're done and you get to claim the kid. All right, let's move on. So those are the tests for qualifying child. Now let's move on to that dependent named George who lived with his girlfriend all year. Can she claim him as a dependent? And we're going to see why she can, because now we're on to the dependency test for qualifying relative. To claim an exemption for a qualifying relative, you must meet all 6 of the following tests. Number 1, joint return test. 2, member of household or, see this or, relationship test. So they have to live with you or they have to be related to you. It doesn't say both. It doesn't say member of household and related, because with qualifying child, they do have to be your child and live with you, right? But for qualifying relative, they have to live with you or they have to be related. Got it? Moving on, citizen or resident test, gross income test, support test, and not a qualifying child test. Now, this acronym here can help you remember these rules. Joe must come get supper now. It's just a way of helping you to trigger to remember those tests. So if you're heading into an exam, what you could do is just remember the tests and write them all down. Actually, they don't let you write down at the federal test, do they? You just got to mentally remember those to see how you're going to answer a particular test question. So let's take these in turn. Joint return test. This is similar to what we saw under qualifying child. You generally cannot claim an exemption for your dependent if he or she files a joint return. However, if your dependent files a joint return merely to claim a refund and no tax liability would exist for either spouse on their married filing separate returns, then you can still claim your dependent's exemption. Citizen or resident test. For some part of the calendar year, a person must be a U.S. citizen or resident, or a resident of Canada or Mexico. Member of household or relationship test. To meet this test, a person must either live with you the entire year as a member of your household or be related to you in one of the following ways: child, grandchild, great-grandchild, etc. Stepchild. Remember, a stepchild is a child of your spouse. A child of your boyfriend or a girlfriend is not your stepchild. Eligible foster child. If placed by an authorized agency, then a foster child is the same as a child except for qualifying you for the qualifying widow or widower filing status. And every other test I can think of, a foster child is the same as your child as long as they were placed with you by an authorized agency. Related to you also includes brother, sister, half-brother, half-sister, stepbrother, stepsister, a parent, grandparent, or a direct ancestor, but not a foster parent, a stepmother or a stepfather, a brother or sister of your parent, as in an aunt or uncle, a son or daughter of your brother or sister, as in a niece or nephew, and father-in-law, mother-in-law, sister-in-law, daughter-in-law, brother-in-law, sister-in-law, and of course, divorce does not end these relationships. Some special notes about relationship. Any relationship established by marriage is not ended by death or divorce. Your in-laws will remain your in-laws for tax purposes. Before legal adoption, a child is considered to be your child once placed with you by an authorized agency. An eligible foster child meets the relationship test and does not need to live with you to qualify as your dependent. Your cousin does not meet the relationship test and must live with you as a member of your household for the entire year. A person who died during the year but was a member of your household until they died will meet the member of household test. In this situation, the decedent is considered to have been a member of your household for the entire year. So if you have a boyfriend who lived with you until June and then he died, and you have to look at how many months that person lived with you to meet the member of household test, you would say 12. Even though technically it wasn't even 6 months because he died in June, you will still state that he lived with you for 12 months because he lived with you up until the point he died. And that also goes for children who were born or died during the year. If you have a new baby that was born on December 30th, you would put down that that child lived with you for 12 months. A child who was born during the year will meet the member of household test if he or she lives with you for the remainder of the year. Required hospital stay is considered to be time spent in your household if the child would otherwise have been a member of your household. A child born during the year is considered to have lived with you for the entire year. Gross income test. You generally cannot claim an exemption for your dependent if he or she had gross income of $3,700 or more for tax year 2011. Gross income generally does include all sources of income, whether or not they are used for support. However, gross income does not include tax-exempt income, such as certain Social Security benefits. Payments received by a permanently and totally disabled person for services he or she performs at certain sheltered workshops, or scholarships received by a degree candidate that are used for tuition fees, supplies, books, and equipment required for particular courses. Next, we have the support test. You must provide more than half of a person's total support during the calendar year to meet the support test. It does not matter if the money you provide for support comes from savings or earnings or from money that you borrow, so long as the money is spent on support during the year. Included in total support: tax-exempt income such as certain Social Security benefits and military housing allowance used for that person's support. Foster care payments you receive from a state or federal agency for the care of an individual are considered to be amounts paid by the state and not by you. That is the case of qualifying relative, but for qualifying child, they don't factor into support at all. Support provided by the state, including food stamps, housing, etc., must be considered when factoring support, unless it can be shown that the benefits were not used for that purpose. A person's own funds that are spent on support, a child's wages that are spent on support, and also the fair market value of free rent. One of the things you have to consider is that if you've got a parent whom you want to claim as a dependent, and that parent of yours is living in their own home and they own the home, and you're providing all of the cost of their support in every way except you don't pay any rent or housing expenses for them other than repairs and maybe utilities and so forth, you're going to have to look at the fair market rental value of the home they're living in. So let's suppose your mother, your elderly mother, lives in her own home, and the fair rental value of that home is $1,000 per month. She is considered to have provided $12,000 towards her own support because that's the rental value of her house. That means you have to spend more than $12,000 on her support in order for her to qualify as your dependent. And if in addition to the fair market value of the rent she could be collecting but isn't, the fair rental value of that house, she also has $5,000 a year of Social Security, now you're going to need to be spending more than $15,000 a year to show that you're providing more than half the support. So this fair market value of free rent is really crucial. Now, on the other hand, it can go the other way. Let's suppose your elderly mother lives with you in your home, and you own your home free and clear, so you don't really have much in the way of expenses other than property taxes on your house, right? Well, if your mother is living in the home and the fair rental value of your home is $1,000 a month, then you are considered to be providing $500 per month towards the support of your mother, and of course the other $500 would be for you living in the house. So what's not included in total support? Federal, state, and local income taxes paid by persons from their own income. Social Security and Medicare taxes paid by persons from their own income. Life insurance premiums, funeral expenses, scholarships received by your child if your child is a full-time student, and survivors and dependents' educational assistance payments used for the support of the child who receives them. So earlier there was a question about student loans. Do they factor into support? The answer is student loans, money taken out by a student in that student's own name and used for that student's support would be a factor in support. But scholarships received by that student and used to pay qualifying education expenses would not factor into that child support. Determining total support. To figure if you provided more than half the support of a person, the IRS provides a worksheet for determining support. The worksheet accounts for the following information: all sources of money and property that might be used for support, division of support when support is provided by more than one person, and when support is provided by more than one person, including the dependent, it accounts for how much was provided by you. And this is the worksheet. We're real tight on time today, so I'm not going to spend any time going over the worksheet with you, but it's there. And essentially what it does, it says how much money are you providing for the support of the household and the person that you're trying to claim. How much of that support needs to be allocated to you and other people in the household, and how much is left to be allocated to the person you want to claim a dependency exemption for. And what other money is also being used to provide for that other person's support. their money, gifts they're receiving, benefits they're receiving. In the end, you have to show that you're providing more than half. And this worksheet walks you through those calculations. And here's the final flow chart, this time for qualifying relative. Dependent taxpayer test. Are you the dependent of another person? The answer must be no. Joint return test. Did that person file a joint return? The answer must be no. U.S. citizen or resident. Was the person a U.S. citizen or resident, or a resident of Canada or Mexico for any part of the year? The answer must be yes. Not a qualifying child test. Is the person the qualifying child of you or another person, as defined earlier under the qualifying child rules? If your qualifying relative is your qualifying child or the qualifying child of somebody else, then they are not your qualifying relative. Is this person a qualifying child? And the answer must be no. If it is, you move on to the member of household or relationship test. Was this person either a member of your household for the entire year or related to you? And gross income test. Did the person have gross income of $3,700 or more for the year? The answer must be no. And finally, we get to support. Did you provide more than half of that person's total support for the year? There's a question in here, what about AGI? Does AGI come into it? AGI can come into determining whether or not a person had enough money to provide support. But it isn't a question of how much you made. It's a question of how much you spent on support. You could earn $1 million and bank it all and give nothing to the support of the other person. So income has little to do with the support test, but of course it requires income for most persons to be able to show that they did spend money on support. A lack of money means it's difficult to support, and most people don't have enough money in the bank account that they can live off of it. But it is technically possible to have enough money in savings that you would be able to support another person without having another source of income. And we'll go through the final item that I did want to talk about, which is the multiple support agreement. A multiple support agreement allows you to claim a deduction for a person who is supported more than 50% by 2 or more people, none of whom provided more than half the support individually. To qualify to claim a dependent under the multiple support agreement, all of the following must be true. Any person who meets all of the other tests to claim an exemption for the dependent and provided more than 10% of the support is eligible to claim the dependency. However, you must agree who will actually claim the exemption on his or her return. So let's suppose we have 3 people, Jack, Jane, and Jill. And Jack provides 11% support, Jane provides 40% support, and Jill provides the remaining support. So that would be another 49%. So no one can show that they're more than half, and all 3 of them paid more than 10%. What happens? Well, they need to fill out this form 2120, and the persons who are agreeing to give up the exemption complete it, and the person who is getting the exemption attaches it to the return. Those persons who qualify but are not claiming the dependency exemption must agree to relinquish their right to claim the dependency exemption by signing the statement agreeing not to claim an exemption for that year. The person who claims the exemption must keep the signed statements with his or her records, and the person who claims the exemption must also identify each of the others who were eligible to claim the exemption but agreed not to on the Form 2120 Multiple Support Declaration and attach that form to his or her return. Now, one of the things I do want to point out is that all of the persons who sign this return and help meet this test must be persons who could claim the dependency exemption because they passed every single dependency test except one, and that one test is the support test. So they still have to meet all of the other tests, member of household or related. They have to show that the dependent didn't have more than $3,700 of income, that the dependent didn't provide more than half of his or her own support, of course, because they're providing more than half of it. So you still have to pass every test. The only test that's allowed to be failed is the support test. And under the support test, you have to show that you and at least one other person who passes all other tests could claim this person's exemption. So I did want to go at this point to the internet and show you Pub 17. So Pub 17 is, there's a table in here because, as I said, IRS created a table to replace the flowchart. Now, I like the flowchart, but maybe you think my flowchart is terrible. You don't like it, and you'd rather see that table. So the table is in Pub 17, and it's on page 26. So let's go up to page 26 and see the table. So this is the overview of rules for claiming an exemption for a dependent. And you can see that there's tests to be a qualifying child, there's tests to be a qualifying relative. And what you do first, before you even get to these tests, is you look up top. You cannot claim any dependents if you or your spouse, if filing jointly, could be claimed as a dependent by another taxpayer. You cannot claim a married person who files a joint return as a dependent unless that joint return is only a claim for a refund and there would be no tax liability for either spouse on separate returns. You cannot claim a person as a dependent unless that person is a U.S. citizen, U.S. resident, U.S. national, or a resident of Canada or Mexico. You cannot claim a person as a dependent unless that person is your qualifying child or qualifying relative, and then we go into the tables. To be a qualifying child, the child must be your son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, stepbrother, stepsister, or descendant of any of them. The child must be under age 19 at the end of the year and younger than you or your spouse if filing jointly. Under age 24 at the end of the year, a full-time student and younger than you or your spouse if filing jointly, or any age, even if they are older than you, as long as they are permanently and totally disabled. The child must have lived with you for more than half the year. The child must not have provided more than half of his or her own support for the year. The child is not filing a joint return for the year unless that return is filed only as a claim for refund. Let's compare those tests with qualifying relative. The person cannot be your qualifying child or the qualifying child of anyone else. The person either must be related to you in one of the ways listed under relatives who do not have to live with you, or must have lived with you as a member of your household for the entire year. The person's gross income for the year must be less than $3,700, and you must have provided more than half of that person's total support for the year. And then you've got these little exceptions and so forth here.
It is now time to complete the Session 2 classwork assignment. There are 2 classwork assignments for Session 2, and we are first going to work on classwork assignment number 1, which is found on page 16 or beginning on 16 of your student manual for Session 2. Using the information from Homework A problems 1 through 10, complete the following Form 1040 headings. For each problem, use the most advantageous filing status that is legally available to the filer. So we have the header here, and we need to fill it out based on the assignments in questions 1 through 10 of homework. So what is the most advantageous filing status? We need to read the problem, determine the most advantageous filing status, and then fill out the header based upon the use of that particular most advantageous filing status. So let's flip to the homework, and here's the homework. Question number 1. Test taxpayer lives in Beaverton, Oregon, and Test is married to John, but John moved out of a house in July. Test paid over half the cost of maintaining her home for her dependent child. List all possible filing statuses that are allowable for Test. Now, based on the information we learned about head of household in Session 1, we know that in order to file as head of household when you are married, you must meet the tests for being considered unmarried. Does Test meet the test for being considered unmarried? And the answer is no. There's a key test that she's failing, and that test is that she did not live with her spouse at any time in the last 6 months of the year. If Test's husband moved out in July, July is the 7th month. That means he was in the house in the last 6 months, and because he lived with her during the last 6 months, she fails that particular test for being considered unmarried. And since she cannot be considered unmarried, she is married. And as a married filer, she has 2 choices: married filing separate or married filing joint. It is probably the case that joint is the better choice for her because it will typically allow her more credits and a lower rate of tax. So we're going to assume that Test will in fact file married. So Test must file married filing joint or married filing separate. She cannot file as head of household because her husband lived with her during the last 6 months of the year. While Test is not required to file a joint return with John, it is likely the case that married filing joint is the most advantageous filing status for Test. So we fill out the header of Form 1040 accordingly. Test is the taxpayer, John is the spouse, and the filing status is married filing a joint return. Let's do one more together, and then you can push pause and do the rest on your own.
Question number 2. Samantha Jones is married to Mark Jones, and they reside in San Francisco. Samantha wants to file single because they were married in September and were unmarried for more than half the year. List all possible filing statuses for Samantha. Well, the fact that Samantha was single for most of the year is not relevant. IRS says that your marital status on the last day of the year determines your filing status for the entire year. If Samantha was married on the last day of the year, that means her two choices are married filing joint and married filing separate, and she would not file as single. Now, it is likely the case that joint will be the best choice, so let's prepare her that way. So here is the answer for Samantha. Samantha must file married filing separate or married filing joint. Single is not an option because she was married on the last day of the year. While she's not required to file a joint return, it is likely the case that that is the most advantageous filing status for Samantha and her husband, Mark. So we will file Samantha and Mark on a joint return and check the married filing joint box. It is now time to pause video playback. Please complete classwork assignment number 1, questions 3 through 10. When you are finished, please resume video playback for a review of the rest of the answer key. And here we are with a review of the Classwork 1 answer key for Session 2. And here we are beginning with question number 3. Zetta Smith divorced her husband in December. Zetta's 30-year-old single daughter, Beth, lived in Zetta's home all year. Beth didn't work much last year and earned only $2,500. Therefore, Beth is a qualifying relative, and Zetta can claim her as a dependent. Zetta paid more than half the cost of keeping up her home at 222 Hippity Hop Lane. List all possible filing statuses allowable for Zetta. So based on the information provided, we can see that Beth maintained a home for the entire year, and she's only required to for half the year, for a person whom she can claim as a dependent, and that person is related to her. That means Zetta will qualify for head of household filing status, and she will also qualify to claim her daughter, Beth, as a dependent. So in completing the header for 1040 for Zetta, we will enter Zetta's name and her address, and we will check the box number 4 for head of household. Question number 4. Zetta Smith's situation is the same as in number 3, except that her daughter Beth worked all year and does not qualify as a qualifying relative. List all possible filing statuses allowable for Zetta. Well, in number 4, Zetta does not have a dependent. And in order to be head of household, you must have a dependent. The only exception to that is if you have a qualifying child. And the reason you're not claiming that qualifying child is because you released that child's exemption to the other non-custodial parent. That is not the case here. Zetta has a 30-year-old daughter who lived with her all year in her home, and the reason she can't claim her daughter as a dependent is because her daughter fails the gross income test. So Zetta will not be able to file as head of household. Her filing status will be single. So for question number 4, Zetta must file as single. Her daughter does not qualify her for the head of household filing status in this situation. So here we have Zetta, and we've checked single in this instance. Question number 5. Jack Sunder lives in New York. His wife Martha died in 2010. Jack's stepson, Johnny Lane, age 13, lived with Jack all year. Jack paid more than half the cost of keeping up his home. List all possible filing statuses for Jack. Well, here is the answer. Jack's wife died in one of the preceding 2 years, and Jack has a dependent child for whom he paid more than half the cost of keeping up a home. Jack therefore qualifies to use the qualifying widow filing status, and that is the status he will select. Jack Sunder lives in New York, and he will check box number 5 for qualifying widow or widower with dependent child, and next to that he enters the year of death of his spouse. Question number 6. Zane Gray is single and paid over half the cost of keeping up his home in Houston, Texas, for himself and his son Joshua, who is age 5. Zane's ex-wife Laura claims Joshua as a dependent. List all possible filing statuses allowable for Zane. Well, what are the possible statuses available to Zane? Zane could qualify for head of household or for single. Head of household is the most advantageous filing status, so that is the one that we will enter on the answer key. He qualifies for head of household because he maintained his home for his qualifying child, and the only reason he is not claiming his child's exemption is because he released that exemption to the non-custodial spouse. Zane will enter his name. He will claim the filing status head of household, and you will see in the space provided, he is listing the name of the qualifying individual. That is the person who qualifies him for the head of household status. Normally, the person who qualifies you as head of household will be listed as a dependent, but in the case of a qualifying child whom you are not claiming because of the non-custodial parent is claiming that child instead, then you enter the child's name and the child's social security number, which we have properly done. Question number 7. Sally Summers is married to John Summers, and Sally lived with John all year in Aloha, Oregon, but doesn't want to file a joint return. Sally earned most of the household income, and she considers herself to be the head of the household. She wants to file head of household and claim her 2 children as dependents. List all possible filing statuses for Sally. Now, Sally's situation is actually a relatively common one. Many people seem to think that because they earn the most money in their married household, that they are the head of the household. But it doesn't work like that for tax purposes. When you are married, it doesn't matter who earned the money. The IRS says you're married. And as a married couple who live together, you must file married filing joint or married filing separate, and head of household is not even an option. So in this case, Sally can file separately or jointly. She is probably better off filing a joint return, so we will enter the information for a joint return on the answer key for question number 7. We enter John's name, we enter Sally's name, and we check the box, married filing a joint return. Question number 8. Sam Sanderson is married to Jill Smith and lives in Memphis, Tennessee. Jill has been in a nursing home all year because she is ill. Their son John, age 16, has been at home all year. List all possible filing statuses allowed for Sam. This one's a little confusing too. Does Sam qualify for head of household, or should he be filing a joint return, or does he file married filing separate? Well, the answer is that when you have a family member who normally would be living with you, and the only reason they're not living with you is because of a temporary absence, such as nursing home care, college, or military service, the fact that they're not physically in the home does not mean that they are not considered to be in the home. In other words, if a member of your household is temporarily away because of a medical condition, because of going to school, or being in the military, and that the intention would be that they would return to home if they were able to, then they are considered to be at home even if they're not there. So in the case of Jill, even though she lives in a nursing home, she is still considered to live with Sam. And since she is considered to live with Sam, Sam would not qualify for head of household. His 2 filing status choices are therefore married filing joint and married filing separate. And between the 2 of those, it is likely the case that married filing joint is the better status, and so that is the status we will enter. Sam and Jill are filing a joint return. The status is married filing joint. Question number 9. Sandy Peters is single and lives at 1234 9th Avenue in San Francisco. She pays more than half the cost of maintaining a separate household for her mother, Jean, who qualifies as Sandy's dependent. List all possible filing statuses allowable for Sandy. Well, Sandy is single. That's a filing status she could use. The other filing status she qualifies for is head of household. For head of household, you normally must maintain a household for a qualifying person who lives with you for more than half the year. But the one and only exception to that rule is if you maintain a household for your parent. If you're maintaining a household for your dependent parent, the parent does not need to live with you. So in this case, Sandy does qualify for the head of household filing status. So we will enter Sandy, her address, and check box 4 for head of household. You will note that the space underneath is blank. The reason that it is because Sandy will be entering her mother's name and social security number on line 6 of Form 1040 and claiming her dependency exemption. It is therefore not required to complete line 4. And finally, question number 10. Jackie Jones is married to John Jones, and they live in Virginia Beach, Virginia. John, a Marine sergeant, left home in May and has been in a combat zone for the past 7 months. Jackie has a dependent child and worked part-time during the year. List all possible filing statuses available or allowable for Jackie. Well, the answer for Jackie is that her husband's absence is considered to be temporary. He is in the military, away from home on a temporary basis. He is expected to come home. Therefore, she cannot qualify for head of household because her husband is considered to have lived with her for the entire year. Therefore, her filing status choices are married filing joint or married filing separate. Married filing joint is going to be the better choice. So let's look at what our answer key has to say here. Jackie can file joint or separate. Since John is serving in a combat zone, he has an automatic extension of time to file and pay his taxes. It is often the case that a member of the armed forces will sign a general power of attorney authorizing his or her spouse to carry out the financial matters of running a household while they are overseas. If this were true for John and Jackie, she could file married filing joint even though he is not available to sign the return. Jackie cannot file as head of household even though John did not live with her during the last 6 months of the year, because the time he spends serving in the armed forces overseas is considered to be time spent at home. His absence is temporary. You should also refer to Publication 17, page 22, and read the paragraph entitled Spouse in Combat Zone. Because Jackie's spouse is serving in a combat zone, she is permitted to sign for her husband if she attaches a statement to the return which states he is serving in a combat zone and is unable to sign for himself. Jackie will therefore enter her name, her husband's name, and check the married filing a joint return box. So that concludes the review of the Classwork 1 answer key. It is now time to break and complete Classwork Assignment Number 2. Classwork Assignment Number 2 is a series of questions 1 through 10, and question number 10 is actually completion of a tax return. The questions really focus on two areas. One is the multiple support agreement, and the other is the release of claim to the dependency exemption of a qualifying child by the custodial parent to a non-custodial parent. So the assignment is largely around just asking you to think about those two subjects a little. Question number 10 is actually asking you to complete a tax return for John Sanders, who is married to Maggie Sanders. It'll be your first tax return of this course. They reside at 222 Northeast Mississippi Highway in Aloha, Oregon. John is a manager. Maggie is a custodian. Their W-2s are attached. The Sanders have 2 children living with them. Their son, Mark, lived with them all year, and you need to pay attention to his date of birth. He is born in 1998, so for 2011, that would make him 13 years old. So whenever you look at a year of birth, you should get out your handy-dandy calculator, and you'd go 2011 minus the year of birth, 1998, to get the age, 13. And it's really important that you pay attention to these ages because there's all kinds of tax laws that will fade in and fade out based on age. So pay attention to the age of the children and also the taxpayers when you're preparing any tax return as a part of this course. So they have 2 children, Mark, who is age 13 and lived with them all year, and Maggie's nephew, Jerry, who has lived with the Sanders since 1999, and they provided all of his support. So he was born in 1994. We're going to go 2011 minus 1994. That makes him 17 years old. Well, what's important about being age 17? Well, at age 17, the child is too old for the child tax credit. So I'm giving you a couple of hints here. The Sanders have 2 dependents. They will be filing a joint return, and their income is shown below. One of the dependents will qualify for the child tax credit and the other will not. Go ahead and prepare the return. You can see here that we have wage income for John of $32,000. He has federal income tax withheld in the amount of $1,500. We have a second W-2 for Maggie. She earned $19,000. Her federal withholding is $1,500. So at this point, please push pause on video playback. Complete Classwork Assignment Number 2 for Session 2. When you are ready, please resume video playback for a review of the answer key. And here we go with the review of the Classwork 2 answer key. Question number 1. In what circumstances would Form 2120 Multiple Support Declaration be used? Well, the Multiple Support Declaration is used when 2 or more people combined provided more than half the cost of supporting an individual, but neither of them independently provided more than half. If that happens, the IRS says even though you meet all of the tests but you fail one test, the support test, will allow you to claim the dependency exemption for that person if all of the other people who helped support that person give up their entitlement to that exemption. So the form is used when two or more people each provided more than half the support, but no one provided more than half singly or individually. Number two, what is the purpose of the form? The purpose of the form is to release the exemption. Two or more people who provided over half the support combined will agree between them that one will claim the exemption, and the people who are giving up the exemption sign the form, and the other person who is actually claiming the exemption will keep the form with their records. Question number three, what happens if the parties cannot agree? Then who will be allowed the exemption? And the answer is nobody, so you may as well agree. Question number four, what requirements must be met to use Form 2120? The requirements are that you meet all of the tests for claiming this person as a dependent except the support test, and that there are other people who also meet all of the tests except for the support test. So these other individuals are agreeing to give up their entitlement to the exemption for you. They will sign the form, and you will attach the form to your return. Number five, who attaches Form 2120 to their return? The person who is claiming the exemption. So question number six then, who is the custodial parent? Now we're moving on to this concept of divorced or separated parents where there is a dependency exemption in play for a qualifying child. The custodial parent is the person with whom that child lived the greater portion of the year. If the child lived with both parents equally, IRS says, whose house did that child sleep in the greatest number of nights? And so you would look at a 365-day year, except for leap years, 183 days is more than half the year because 183 plus 182 is 365 days. So the custodial parent is the person who has custody of the child for the greater portion of the year. So question number six, if there is a divorce decree or a court decree awarding custody, the custodial parent is the parent named in that document. If there is no such document, custody belongs to the parent who had physical custody for the greater part of the year. For more information on this topic, please refer to page 28 of Pub 17 and look at custodial parent and non-custodial parent on that page. Question number seven, which parent can claim the exemption if there is no written agreement or it is not stated in the final divorce papers? If there is a divorce decree or other written agreement awarding custody, the exemption will always go based on that written decree. If there is no written decree, then the IRS looks at the physical number of days that the child lived with each parent and awards the dependency to the parent who had the longest custody during the year. But if custody was equal, then we look at who earned the most money, and the parent with the highest adjusted gross income will claim or be entitled to claim the dependency exemption if custody is equal. When can a non-custodial parent claim the child's exemption? A non-custodial parent can claim a child's exemption only if the exemption is released by the custodial parent using Form 8332 or a similar statement such as a divorce decree. Question number 9, what is the purpose of Form 8332? The purpose of Form 8332 is for the custodial parent to release a child's exemption to the non-custodial parent. The form is attached to the tax return of the non-custodial parent who is claiming that child's exemption. And question number 10, prepare the tax return for the Sanders. So I've opened up in front of you the answer key for the Sanders just so that you can take a good look at it. You can see that we have their 1040 here. The first step in preparing the tax return for the Sanders is that they are married and they will be filing a joint return. As I explained to you before the break, Mark and Jerry are both dependents. Jerry is a nephew and Mark is a son, so those are the descriptions we will use, son and nephew. And Mark, because he is under age 17, will qualify his parents for the child tax credit. Jerry is a qualifying child for purposes of dependency, but he is not a qualifying child for the child tax credit because he is over age 16, or he is not under age 17. The next part is to begin filling out the tax forms. We also see that the filing status is married filing joint, and that we are entering two exemptions for the husband and wife. one exemption for a child who lived with the Sanders, and another exemption for a dependent other than a child. Next, we have on line 7, $51,000. That is the amount of income that the Sanders had for the year. It pulls from their W-2s. One of the W-2s shows $32,000 of income. The other W-2 shows $19,000 of income. You combine those two amounts and you get $51,000. On page 2, we have the adjusted gross income carrying from page 1. That's $51,000. The Sanders are married filing a joint return that gives them a standard deduction of $11,600, which we enter on line 40. We subtract line 40 from line 38, and we get $39,400. Next, we enter their exemption deduction, which is going to be $3,700 times 4. We look at the number of exemptions shown on line 6D, and we multiply that by 3,700 and enter the total, which is $14,800 on line 42. Now we subtract that number out from line 41, and we're left with $24,600. That is the Sanders taxable income, and at this point we're going to go to the tax tables in Pub 17 to look up the tax on $24,600. If you're to do that, you will come up with tax of $2,844, which is the amount that we enter. The next step is to enter the child tax credit. The Sanders are allowed a $1,000 credit per child. Their income is low enough that they're not subject to a phase-out, and they will get that $1,000 credit in full. It reduces their tax from $2,844 down to $1,844. The next step is to look at their withholdings, and we can see that Maggie had $1,500 withheld and John had $1,500 withheld. We combine those two amounts and enter $3,000 on line 62. $3,000 is greater than their tax. They are left with a refund of $1,156. So that completes the review of the Classwork 2 answer key for Session 2. Let's now take a look at the homework assignment for Session 2. And we sort of spent some time looking at the first part of the homework assignment when we were looking at Classwork number 1. For Classwork number 1, I asked you to complete the header of Form 1040 and select the most advantageous filing status for each taxpayer beginning on page 23 of the Session 2 manual. For homework, the assignment's a little more challenging. For classwork, I asked you to list the most advantageous filing status, but for homework, I want you to list all possible filing statuses that a filer can qualify for. Let's take a look at what I mean. Test taxpayer is married to John, but John moved out of the house in July. Test paid over half the cost of maintaining her home for her dependent child. What are the possible filing statuses allowable for Test? The answer is married filing joint or married filing separate. Those are her two choices. So the two possible filing status choices for Test are married filing joint or married filing separate. Let's look at number 2 together. Question number 2. Samantha is married to Mark. They reside in San Francisco. Samantha wants to file a single because they were married in September and were unmarried for most of the year. What are all of the possible filing statuses that are allowable for Samantha? And it's really the same as number 1, married filing joint or married filing separate. Those are the only two choices. So for homework, I would like you to continue on with the homework assignment, beginning with question number 3, and list all of the possible filing status choices for the remaining questions in this assignment. And of course, there are a total of 16 questions that ask you to determine all possible filing statuses under homework assignment number 1. Homework assignment number B for session 2. For the taxpayers described in questions 1 through 9 below, determine the following: the correct filing status, the number of qualifying children who can be claimed as dependents on the return, the number of qualifying relatives who can be claimed as dependents on the tax return, and the number of dependents that are eligible for the child tax credit. I'll cover number 1 with you, and then you'll do the rest on your own. Question number 1. John and Martha, a married couple, paid over half the cost of supporting their daughter, Georgia, aged 28, who was unemployed during 2011 and had no gross income. So what is the filing status of John and Martha? Well, it's likely going to be married filing joint. They could file separately, but it's unlikely that would be their best choice. So we'll go with number 1, question A, filing status choice is married filing joint. Question number B, do they have any qualifying children who can be claimed as dependents? Well, the answer is no, they don't. Their daughter lived with them, but she is not a child under age 19 or a student under the age of 24. She is their child age 28. That makes her a qualifying relative. So for question number 1, we're going to select the filing status of married filing joint. The number of qualifying children equals 0. The qualifying relative equals 1. And the final, the number of dependents who are eligible for the child tax credit, that would be child tax credit equals 0. In order to qualify for the child tax credit, their daughter would have to have been under the age of 17, and she was not. So your job for your homework assignment is to complete the remaining questions 2 through 9 and answer all of these questions correctly. I will see you at the beginning of Session 3, and at the beginning of Session 3, we will review the Session 2 homework assignment. Session 2 password number 3 is PIKE, P-I-K-E.